Hello, everyone. Welcome to the weekly roundup. Today, we will cover the FOMC, possible trade agreements, and earnings releases. Hello, Ben.
Hi, Eva.
It's been a buzzworthy week.
Yes,
Lots to cover today.
definitely.
Okay, so we're going to start with one of the top news this week. And Kevin Walsh has been confirmed as the next Federal Reserve chair.
Yeah.
With inflation numbers elevated, what should investors expect from his first meeting?
That is a great question and great place to start. Obviously, I'm going to cover some of that. You've had a peek at the chart, so we're going to cover some in depth, maybe how the process looks a little bit within the Fed.
Okay.
But to comment on him specifically and what we should expect and who he is, I think that's a good point because I think it was him and two others that were the possible candidates to take over. And for the decision, there's kind of been some back and forth. Trump liked him, didn't like him, like him, didn't like him. Anyways, he has spent the last, I feel like 10 years, maybe 15 years. I think 2011 is when he got out of his role within the Fed. And since then, he's been working on lots of different projects. But one of the biggest things he's been doing, he's been working with Stan Druckenmuller's private family office. Stan Druckenmuller is probably or at least in my opinion, the most successful hedge fund investor of all time. Stan has never lost money in the past 40 years of running money. And so Kevin's worked alongside him for the last 10 plus years. And so he comes from a background of market experience. He has sat on a number of boards within the tech, AI space. He's got connections all over the world. One of the companies he sits on, I think, is a Singapore company. And so he's got a lot of, I'd say, finance slash economics experience, which outside looking in doesn't mean much, but really when it comes down to the decision making, I think it's going to play a role. And over the last 12 months, he's been talking about policy and what he thinks about and what he wants to do. And one of the things that he wants to do, or at least says he wants to do, is lower the front end, which is cut rates. So I don't expect that by any means in the first meeting. But I think in the first meeting, we're going to get a much better sense for what he's planning to do. So cut the front end, and also to change the conversation around forward guidance. He doesn't like that idea either. Um, so, so I'd expect that first meeting we're going to get a much better picture for what it's going to look like with his leadership. And I think he probably gets along with Besant pretty well, which is the Treasury Secretary, and that the combination of those two guys working together probably is quite positive for the US, and particularly for the US dollar, which is, I think, one of the things that they most need to be concerned about. So, yeah, lots of ground to cover with him. And the first meeting in June is going to really give us a good picture for what it's going to look like. But I think the decision, when you strip it back, is business and economics together is quite a different leader than Powell was. So, well, that'll be important to watch.
Okay, on to another interesting news. Trump has arrived in Beijing for his first official visit.
Mhm.
Discussions are expected to focus on trade, AI, broader geopolitical issues. These are high-stake talks. What should investors expect? Any meaningful progress, possible trade agreements, or is a modest ease in intentions, a more realistic outcome from this meeting?
Yeah, obviously he brought Elon Musk along for the ride. So Elon, I think, stealing all the pictures. Everyone wants a selfie with him. I saw Tim Cook even take one. I think bigger picture, what's he hope to get out of it? Yeah, I think one of the things that he's inflicted in the past 6 months is a lot of pain on the Chinese economy as a result of taking Venezuela offline and then the attack on Iran. So I think behind closed doors, that's going to be a big topic of conversation. What are we going to get out of it? I think there'll be some kind of, we'll say, agreement to allow the rare earths to continue to flow because they need that for the semis. So that'll be part of it. Maybe some kind of agreement on oil and where that's going to come from. But I mean, Xi is quite set and dug in on what he's planning to do for the Chinese economy for the next decade, where Trump's hoping for some wins for the next 3 to 6 months. So I'd say, yeah, we'll see. Nice that they're still talking. Good that the relations seem to be generally we're gonna work together. But I don't think there'll be anything earth-shattering there because the U.S. and China are in a real big state of clash right now. And I think that'll continue at least while there's pressure on energy.
Okay.
Yep.
So I'm wrapping up with the market. We are still in earnings season.
Yep.
Alibaba and Cisco were in focus this week.
Yeah.
What should investors be watching, about their results, and how was general market sentiments this past week?
Yeah, so I think those are two good bookends to look at. I mean, Alibaba came out and I saw their earnings and at night and they looked like they were terrible. Looked at the stock pre-market, it was down about 5%, but it was up 3 at the open. So, I think from Alibaba perspective, their business line is quite interesting and unique, and they are, from a valuations perspective, if you think Alibaba and Amazon are similar businesses, Alibaba's super cheap in relation to it. So that's probably why it got a bit of a bid. So I still think that business is really well positioned, and as the Chinese economy continues to go digital, I'd be shocked if there's any cash in the system in the next few years in China because Alibaba processes a lot of that, Alipay and such. And Cisco, I mean, Cisco's caught up in the AI attention. Their revenue's been good. Their numbers were good. The stock's up 13, 15% today. So yeah, I think when we started talking about quarterly earnings out of the US about a month ago, I said, last quarter forecasts were soft, and now a lot of these tech companies have been beating expectations and raising guidance. But the attention continues to still be with productivity and energy, and AI is really driving things higher. As for the sentiment of the market, it's quite interesting because the sentiment of the market is positive, but where we're seeing a divergence is like if you look at like Michigan consumer sentiment, um, we're at an all-time low in consumer sentiment, all-time high in stock market, which is the biggest divergence we've ever seen. So, but from a we'll say stock market perspective, quite positive and optimistic. So, starting to signal maybe the higher end of the range right now, and maybe there's some opportunities to trim or hedge.
Okay. Let's see the charts. I see some interesting charts today.
Yeah, yeah. I think we're trying to cover some context around what we're going to see with a new Fed chair. So we're recording this May 14th at 1:08 p.m. So anything that happens between here and next Thursday, we'll comment on. So let's start with Warsh Fed chair transition. So this is just a look at the timelines for what's going to happen here. And so, as you said yesterday, the Senate confirms Warsh. This is the closest ever that they've had, 54 to 45. And then tomorrow, officially the term begins. So Chair Powell's term ends, and Warsh expected to take over. And then the swearing in process is the next step, which will happen probably next week, I would assume. And then to your point around what are we going to see and when are we going to see that? June 16th and 17th, going to be a very important Fed meeting. And, I don't think there's going to be anything earth-shattering except for how he frames things, how he views the world, what the communication was like internally within the Fed presidents. So that's going to be an important one to watch. And it's going to be like what's going on with rates. What does he think about inflation? Excuse me, because right now generally, he thinks inflation can be transitory and let it run a little bit hotter, and maybe he's significantly looser in his view. Dot plot forecast. Some of this stuff might disappear. So I'd say these would be the key things to look at in the first meeting, and something I'm looking forward to because now we're going to get a much better sense now that some of the noise is past. Is Powell going to stay? What's he going to do? What's going to happen? And so now we have clarity, and the market likes clarity. It's a lot easier to predict if you know who's in the seat. Next one is who votes at Warsh's first FOMC meeting. And so I think this is a good way to think about it as well. So there are likely 12 voters in June, and it's broken down by these different individuals, but this is effectively who's going to be voting. They say they're independent, but I thought it was worthwhile profiling kind of who, where they've supported in the past. And so Kevin Warsh obviously is Trump Republican supporter. They got Jerome Powell, it says mixed history. And then the others were appointed. So Michael Barr would have been Biden Democrat. Michelle Bowman was a Trump Republican, so she was one of the finalists as well. So was Christopher Waller. And Lisa Cook and Philip Jefferson were Biden appointees as well. So these would be the voters and someone that we need to think about. Additionally, here we'd have John Williams and Neil Kashkari and these others that would be providing their input and suggestions around what's going to happen. So it'll be interesting to see how it breaks down. It is pretty balanced, and will Warsh be able to change people's views and opinions? That'll be interesting to see. But this first meeting coming up is going to be really important, and it's a pretty balanced Fed right now. Last one is interest rate stance. So as I mentioned off the top, when you ask what we're likely to see, I'd say these are kind of the things we need to pay attention to. And he has a bias towards cutting rates. The conversation often that we have with people is just about what's going to happen with rates, and what does the central bank control. And really, they control the front end of the market. And then we'll say the economy and potentially the Treasury controls the longer end. Obviously, the US central bank in the past have been buyers that would kind of flatten or steepen the yield curve based on where they wanted to see some adjustments. He hasn't talked as much about that, and I think we'll probably leave more of that up to Besant than maybe Powell did. But he's got a bias towards rate cuts. That's a positive for the consumer and something that I think we'll need to watch. Inflation gatekeeper, sticky inflation, energy tariff pressures, maybe cuts harder to justify immediately. So I think that's probably the case. We do think that rates are going to come down under his watch over the next 12 months, but I'd be shocked to see that happen in the first meeting, particularly with the challenges that we have around CPI. You know, the one thing that Powell has done is he's moved his view around what he looks at with inflation. And I think probably what we'll see with Warsh is he'll come in and say, we're going to focus on core. Core strips out the highly volatile assets, which includes energy. And so if you strip out energy, that's going to make a big difference for what inflation metric you're looking at. New framework, as I mentioned, one of the time and attention he spent with his investment process on a personal note is he's looking for productivity to increase with the view that AI is going to play a major role in this. And so be interesting to see if he speaks about that in the meeting. And then really, is he going to talk about any forward guidance? And so I think that would be the 4 points to look at in the meeting, seeing what he's going to talk about, how he's going to view the world. As always, the opinions in here do not necessarily reflect those National Bank Financial. Anything that I say and do is independent on each individual's risk levels. So if you have any questions for Eva or I, if any of this is appropriate or important to you or your portfolio, certainly feel free to reach out to us at any point.
Thank you, Ben.
You're welcome.
So what's on the agenda for next week?
Well, I think that now that this is official, that's a good thing. The market likes that, at least from a directional perspective. I think to your point around what's happening with the Xi and Trump right now, will there be anything interesting that comes out of that? If there is a real positive win, we probably get a push higher. but markets are starting to bounce around. I'm seeing all-time highs, 52-week highs in a lot of stocks. So I think it would be important to see what the follow through is like, what where the money's flowing to, what the underlying like breadth of the market's going. So I'd be watching that right now more than anything. The one key piece that I think we talked about at the start of the year, which I'd continue to look at, is what is the US 10-year rate doing as a major landmark. And the last time we got to the levels that we're seeing on the 10-year and the 30-year in the US, we saw a pretty material correction last time we got to these points. So I'd still be, I'd still say those are the two big ones to pay attention to is bond rates in the US. And if we continue to push higher, which yields are moving higher, that would be maybe a signal that there's some concern in the market. So continue to watch that.
Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hard Investment Group. The link to our daily financial heartbeats will be in the caption of the video and in your inbox if you're subscribed. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you once again for listening and enjoy the rest of your day. Bye.
Bye. Thanks, everybody.